accounts and auditing. So what do you mean by account? In general layman meaning, accounts means to explain, to describe, means account to explain, to describe kind of responsibility. But when we talk in terms of financial status, which is the relevant meaning under Companies Act also, then account means official record of all the money spent or received by a company during a given period of time. Usually this given period of time is financial year usually. Statement of debit and credit during a specific period. So account means you are having official record of each and every single penny spent or received by the company or organization. The health, mental condition of a person allows others to fix the extent of involvement, to fix way of dealing, to take steps to improve it, to decide necessary and proper course of action. So this health and mental condition of A will allow B, C, D and others to fix the extent of involvement with A, way of dealing with A, steps to improve condition of A, and decide necessary and proper course of action as to A. In case of company, this health or mental condition may be considered as financial position of the company. Now, it becomes significant to reveal correct and accurate financial position of company in prescribed way or format. Unless you reveal it correct and accurately, then how others will make the decision whether to deal with the company or not. If it is false, then they will be in trouble. Again, if it is false, they might want to involve, but they may not involve. So further combinations may be there. In prospectus also, true financial condition has to be revealed. So it is very important, because unless you know the health of the company, you don't know the financial status, then how these directors, shareholders and the third person who wants to contact with the company, how they will do it. So when these accounts are being checked, it is known as auditing. Auditing is checking of accounts. Now, Company Act is not there to interfere with the business, but it is there to facilitate the happening of business in an effective and protective manner. Hence, company law safeguards shareholders, general public in corporate world, and account may be considered as one of the means for the same, and in fact it is one of the means to achieve the same. Section 128 talks about requirement of keeping of books of account. Now what do you mean by books of account? Section 2 clause 13 talks about this. Books of account includes records maintained in respect of. So it includes, it is inclusive definition, it includes records maintained in respect of all sum of money received and expended by a company, all sale and purchase of goods and services by a company, all the asset, capital and liabilities of the company, the item of cost as may be prescribed under section 148. So book of account include records maintained in respect of all these things. So exactly all sums received and expended by a company, what company is taking, earning, what company is giving, borrowing, lending, everything, sale and purchase of goods, services, whatever it may be, what company is earning from that, where company is spending it, company have purchased car, company have purchased gadgets, or by delivering service company has earned 1 crore rupees, where is that rupees, where are you using that money, where it is going, everything, the capital and liabilities, it all comes under books of account. It talks about record keeping. 128 clause 1, record keeping. It says company will prepare and keep book of account and other relevant documents. These documents are books, paper and financial statement. So they will prepare and they will keep book of account and other relevant book, paper, financial statement. Now these book of account and other relevant book, paper, financial statement, they should be giving true and fair state of affair of the company, true and fair state of the affairs of the company, of the economic position of the company, including branch offices. Okay, So if a branch is there, then that branch will send a comprehensive report to head office. It will be kept there. Now such records may be in electronic mode. Then 128 clause 2, it says if company having branch office in India or outside India, then the summarized returns, okay, sent properly periodically by branch office, it will be deemed to be the compliance with 128 clause 1. What I told here, that these branch offices, they will send the comprehensive, the summarized returns periodically to the head office. Now company will prepare and keep. Where company will keep these books of account? At register office or at any place decided by board of director. Then inspection of books of account. 128 clause 3 talks about inspection. Who can inspect? Director has right to inspect book of account during business hours. Okay. If company is maintaining financial information abroad, then copies have to maintained and produced accordingly. Okay. So if company is maintaining records abroad, having office in India, so that record has to be kept in India, the copies has to be recorded here. And the concerned person who will be providing these books of account, he is required to give full assistance to the director who are inspecting. 128 clause 4 talks about the same thing. Now registrar and central government can also check these book of accounts as per 209A. Duty bound person. Who are duty bound person? 128 clause 6 says managing director, all-time director, in charge of finance, chief financial officer, any other person appointed by the board. Okay, these are the duty bound person. One must be appointed. If that person contravenes with 128 requirement of this bookkeeping and other thing, then he may be punishable with fine, which is not less than 50,000 and may extend to 5 lakh rupees. Now what is the duration of record keeping? It is 8 years immediately preceding the relevant financial year. So if we talk about this current financial year, then 8 years backward, preceding 8 years. And if age of company is less than 8 years, then all years immediately preceding the relevant financial year. So financial year is 22-23, then before 22, 8 years. Now there is one catch. If investigation is launched by central government, then period longer than 8 years may be asked. They may ask to submit the books of account for 10 years, 12 years, 15 years. Swift and legal remembrance of legal affairs, Bengal versus Zakil Bandhu case. In this, loan given to embroic firm, it was shown as other deposit. So account was not considered to be true and proper. Relevant entries without manipulation is required. So if you put wrong entries, then it will not be a true and proper account. You are creating liability and you are showing it as investment. So how liability can be investment? So because of these wrong entries, the accounts is not true, not clear, and it does not give the correct picture of the company. You are putting your liabilities in your investment, and that will not give the clear picture of what are your assets and what are your liabilities. Section 129 talks about financial statement. Financial statement is defined under section 2 clause 40. Financial statement in relation to company. In relation to company, it includes balance sheet at the end of financial year, profit and loss account, cash flow statement of financial year, statement of changes in equity if applicable, any explanatory note or annexure with any of these statements. It covers your financial statement. 129 clause 1 talks about financial statement must give true and fair state of affairs of the company, complying with the standard as per 133 and as in form provided under schedule 2. Now there are certain exceptions. There are companies, if they are not disclosing certain things, then that will not amount as non-disclosure, because they are not disclosing it by virtue of their statutory compulsion. For example, insurance company. If insurance company is not required to disclose by virtue of insurance law or insurance regulatory and development authorities guidelines, then this will be not considered as non-disclosure. Similar with banking company, company engaged in generation or supply of electricity, and company governed by any other law. So company engaged in generation or supply of electricity, if it is not required to be disclosed by Electricity Act 2003, then it would not be considered as non-disclosure. Then presentation of financial statement. It will be presented at every AGM. AGM means annual general meeting. Before board it will be presented, and if subsidiary company is there, then in addition to the statement as per 129 clause 2, there will be a consolidated statement which will consolidate the company, subsidiary company deviation 129.5. So if company do not comply with the accounting standards, okay, accounting standards are set by central government or other relevant authority. So if company do not comply with it, then company will mention the effect of deviation, reason for deviation, and financial effect if any. So particular, there are many kinds of record keeping process or softwares also. So all of them are having their own inherent intricacies. Doing with commerce, dealing with commerce is not the subject matter of the current discussion, so we will not be going into detail that. But because of that, the picturization of the financial situation of a company may vary. So that's why this deviation is required to be mentioned. Then liability. If managing director, whole-time director in charge of finance, chief financial officer, any other person, any of this person is appointed, he contravenes, or if none of such person is appointed, then all the directors, they are liable for imprisonment, which may extend to 1 year, and fine not less than 50,000, which may extend to 5 lakh, or both imprisonment and punishment. 130 talks about reopening of accounts. So as a matter of practice, generally what happens, company shall not reopen or recast its financial statement, but they can do, it has to be done if application is made by central government, income tax authorities, Security and Exchange Board of India, or any statutory authority concerned. Okay, if they apply to court or tribunal, any one of them or all of them, if they apply to court or tribunal, then tribunal will give notice to central government, SEBI, IT and other authority, and court or tribunal will hear them, and after hearing them, court will pass the order as it thinks fit. So for example, central government has applied for the application, then court, this notice will be sent to SEBI, IT and other authority. Now what are the grounds of making the application? So grounds for making the application are: earlier records were fraudulent, okay, they were of fraudulent manner, and mismanagement during relevant period putting doubt on authenticity of financial statement. These two are the grounds, and this authority based on these grounds can make an application for reopening or recasting of financial statement of the company. Then voluntary revision of financial statement. Who can do the voluntary revision of financial statement as per 131? Directors. If directors thinks that financial statement or report of director, it fails to comply 129 and 134, then they may prepare revised statement or revised report. So for this they need to take the approval of the tribunal. They will apply to tribunal, and tribunal on receiving this application will give notice to central government and IT authorities, income tax authorities, and after hearing their submission, if any, tribunal will pass the order accordingly. Now 129 we have covered. 134, what does it talks about? It talks about financial statement and board's report. So financial statement before signed is required to be approved by board of directors. Once approved, then it will be signed. Who will sign? Chairperson if authorized, or 2 directors, out of which one should be managing director, if any, if company is having managing director, and CEO, chief executive officer if he is director, chief financial officer, and company secretariat if any in the company. They will sign it. Usually article of association provides how to do it. and they provides it in the consonance or consistency with the Companies Act only. Now as per 134, what 134 requires? It requires that there shall be attached to the statement this statement which is laid before company in general meeting, report by its board of directors, which we are talking about. Okay, auditor's report shall be attached to every financial statement, and this report shall include. Now look, compliance of 129 and 134 is required, and 134 says that report shall include web address, number of meeting of board, director's responsibility statement, detailing aspect of fraud reported by auditors, statement on declaration given by the independent director. So these are self-explanatory, you need to learn it. In case of company which is covered by 178, then the company's policy on their appointment and remuneration of the directors, and the positive attributes, qualification and independence of the director. Then explanation or comment by the board. Suppose some reservation or adverse remark has been given by auditor or by company secretariat. For example, that you have mentioned wrong entry. You have shown your investment as your liability, however that investment has given you money, but again you are showing it at your liability, which is not appropriate entry. So if such adverse remarks or reservation is there, this is example only, then explanation or comment as to that adverse remark or reservation, it should be there. Particulars of loan, guarantees or investment under 186, particulars of contract or arrangement with related parties. So 186, 188, they allow company to go for loan, guarantees, contract or arrangement, because these are inherent in order to run the business. And then the state of company's affair, the amount which it proposed to carry to any reserves. Company is having reserves, so the amount which is proposed to carry, this amount will carry to free reserve, this amount will carry to redemption reserve account, and so on. The amount which it recommends should be paid by way of dividend. What is the amount which would be paid by way of dividend? Then the material changes which affect the financial position of the company, the conservation of energy, technology absorption, the foreign exchange earning in such manner as may be prescribed. Then the statement indicating development and implementation of a risk management policy for company, including identification therein to element of risk. So it basically talks about your development and implementation of risk management policy, because companies are having this policy. You cannot survive in this typical commercial environment. Being a smaller company you may, but still you need this risk management policy. Then the details of policy developed and implemented for your social responsibility initiatives. In case of listed company and every other company, okay, statement indicating manner in which formal annual evaluation is being done, that document has to be mentioned, and other matters as may be prescribed. Now the director's responsibility statement as per subsection 3 clause C, what it covers? It covers applicable accounting standards has been followed in preparing the report, preparing the documents, and directors has selected such accounting policy, applied them consistently, which give true and fair view of state of affair of the company. I told you different accounting policies and standards shows the condition of the company differently. So they are using policy which are giving true and fair view of state of affair of the company. And then the directors had taken proper and sufficient care for maintenance of adequate accounting records as per the act. They are doing it. Will do NFRA, then you will get much clarity about it. The directors had prepared annual accounting on a going concern basis, and the directors in case of listed company has laid down internal financial control to be followed by company. Okay, and these controls are adequate and operating effectively. So they have their internal financial control also. Internal auditing also is happening. But here we are talking about their internal financial control, and that is happening effectively. And lastly, the directors had devised proper system to ensure compliance with the provision of Companies Act, and system is working adequately and effectively. So these are the requirements which shall be there with the report. If not, then voluntary revision can be there. Now contravention of 134 liability would be there. Company will be punishable with fine not less than 50,000, which may extend to 25 lakh, or every officer may be punished with imprisonment up to 3 years, or fine not less than 50,000 but may extend to 5 lakh, or both. Now National Financing Reporting Authority, NFRA, as per 132. So this NFRA was constituted on 1st October 2018 by Government of India under subsection 1 of 132 of Companies Act. Now function and duties. So as per 132 subsection 2, the function and duties of NFRA are to: they will recommend accounting and auditing policies and standards which are to be adopted by the companies. Then they will monitor and enforce compliance with accounting standards and auditing standards. They will monitor and enforce compliance. Then they will oversee the quality of service of the professions associated with ensuring compliance. So this is not required now. Yes. So they will oversee the quality of service, okay, associated with ensuring compliance of such standard and suggest measures for improvement. So overseeing quality of service related to these auditing policies and standards. And they will perform, the authority will perform such other function and duties as may be necessary or incidental. Now the rules of NFRA, Rule 4 Sub Rule 1 talks about that authority shall protect public interest and interest of investor, creditor and other associated with company. Okay, how they will protect this public interest and interest of investor, creditor and other associate? By establishing high quality standards of accounting and auditing. This is the one way. By establishing high quality standard of accounting and auditing, and exercising effective oversight of accounting functions performed by the companies. Exercising effective oversight of accounting functioning. This is how it will do. And what are the authorities, what are the companies falls under the grips of this authority? Companies whose security are listed on any stock exchange in India or outside India, if it is a listed company. Unlisted company, so what is the requirement? Paid up capital is one requirement, annual turnover is another requirement, and outstanding in aggregate outstanding loans, debentures and deposit. So if company is having paid up capital of not less than rupees 500 crores, it fall under the purview of authority. Or having annual turnover of not less than rupees 1000 crore, or having in aggregate outstanding loan, debenture and deposit of not less than rupees 500 crores on 31st March of immediately preceding financial year. So if company falls in any of these criteria, it will fall under the grips of authority. The insurance company, banking company, companies engaged in generation of supply of electricity, all these will fall under the authority. Any company or body corporate on a reference made to the authority by the central government in public interest. So if central government made the reference to the authority in public interest, then that body corporate will come under the authority also. So if anybody incorporate or register outside India, but that company is having a subsidiary or associated company in India and it falls under A to D, okay, then it will also fall under the grips of this authority. Now this authority has power to investigate, okay. So authority can, as per clause 4, authority can investigate either suo motu or on reference made to it by central government. So if central government made a reference or committee itself receives the information, committee can run investigation into what? Into matters of professional or other misconduct committed by a member or firm of CA. So matters of professional or other misconduct related to these financial statements and auditing, it will fall under his purview. Then have the same power. Now this authority will be having same power as vested in civil court under CPC 1908. What powers? Power, namely discovery and production of books of account or other document at any place, summoning or enforcing the attendance of person and examining them on oath. Now company wants to know that the CS has not done the work properly, so they will require his attendance. So they will summon him and they will call him that yes, you have not you have done some misconduct or you have not acted professionally, so we are summoning you. They will summon him in order to get the information. Then inspection of any books, register or any document of any person which is referred to in clause B, okay, inspection of any book or register. then issuing commissions for examination of witness or document. For this purpose it will be considered as civil court. Then see, where professional or other misconduct is proved, okay, now if this conduct is proved, then this authority can make order. It may impose penalty and it may debar the firm or member, okay. So it can make order as well. So penalty in case of individuals not less than 1 lakh rupees, which may extend to 5 times of the fee received, and in case of firm not less than 5 lakh, which may extend to 10 times of the fee received, and debarring the member of firm from 1. Being appointed as auditor or internal auditor in respect of financial statement or internal audit of functions and activities of the company. So they will be debarred from being appointed as auditor or internal auditor or undertaking in any audit. So whatever audit related task is there happening in the company, they are debarred, and they cannot perform any valuation as per 247 for a minimum period of 6 months or such higher period not exceeding 10 years. It will be determined by NFRA. Then its head office shall be at New Delhi, and accounts of NFRA shall be audited by Comptroller and Auditor General of India at such intervals as may be specified. We will cover auditing in next video.